trading for a living is not what people think it is. It might seem cool, might seem like something you can do and make a lot of money with, but most of the time you gotta build the right skills and learn from your own experience. But in this video today, I combine advice of some of the best traders I've known on how to actually trade for a living, things you can do to make the odds in your favor and increase your capital over time, build the right mindset, of course. This is a 1 hour masterclass. You can go back to it as many times as you want, pause it, go double speed if you want to. You'll learn from 3 traders on how to actually trade for a living, and hopefully you make the most of it. Let's dive right in.
There are 3 things I did that radically changed my trading for the better. Number 1, I focused on one single instrument. All I trade is the US 30 these days. I'll trade a little bit of NASDAQ too, but I mean, even within that subset, I'm only trading one single product, right? But generally, I want to trade one single instrument. So that was number 1 thing that has improved my trading. Because then you get to know, the reason why you want to trade one single instrument is, as individual traders, we have a huge amount of advantages, but we also have a huge amount of disadvantages. The one disadvantage we greatly have is that we don't have any information edge. We don't really know who's buying, who's selling. We certainly can't front run the news. Reacting to the news is almost always a sucker bet. But we do have as our advantage is our ability to trade small. In other words, whatever we do isn't going to impact market price, so we can get in and out of things very quickly. And the value of focusing on one single instrument on an intraday basis, this is a critical thing. I'm talking about an intraday basis trading because that's what I do, is the patterns on an intraday repeat themselves over and over and over every day. There literally is only 2 trades to make. I'll get into that in just a second, but there's just 2 trades to make intraday. As soon as you figure out that those pattern repetitions, it becomes so much easier to read the market. You don't need volume trader. You don't need fancy indicators. You need anything. There's just really only 2 things you need to understand. And the only way to do that is by watching the market very carefully. So that's been one thing, just focus on one instrument. And then the second thing that's just totally improved my trading is I stopped all averaging in. I stopped all martingaling, and I went to a 1-to-1 risk reward ratio. I basically went to 1-to-1 R, and all I'm trying to do is be 51% better every day. I generally succeed at being 60%. But if you're anywhere on the positive edge of that spread, it's really helpful. And then the third thing is, obviously, I'm a huge believer, we talked about this in using algorithmic tools for a whole bunch of reasons. But the single most important reason why I use my algo to trade is because it helps me execute and manage the stops and targets automatically. What I find is that as long as you have trust and faith in your setup, let's say you trade it, doesn't work because of course it's never going to work always, and you trade it again and you trade again properly, and the properly will never occur if you do it manually. If you do it manually, you're always going to the worst. The worse you do as a trader, 2-3 losses in a row, you're always going to want to fidget and screw up the process. The algo will only take the trade as you wrote it, on the rules that you wrote it. That's a huge advantage. So I just basically those 3 things. One product, 0 leverage, 0 martingale, even money trades, and let the algo do the work. It's been a huge improvement in my results just from the steadiness of my equity curve. I don't want to jinx myself, which I probably will, but those have been the 3 things that really help. I believe that everybody who tells me you have to have a positive risk reward has, let me first make the unkind comment. Everybody who tells me to trade with a 2-to-1 or 3-to-1 risk reward ratio is really not trading. Those are not traders. Those are YouTube gurus. Because in reality, nobody gives you $2 bills for 50-cent bets. Okay, I mean they do, but that happens 1 out of 100 times. It's not about risk reward ratio. It's about your win bet ratio. In a real market with incredibly efficient prices, incredibly efficient flows, it's extraordinarily difficult to achieve anything that is 2-to-1 risk reward more than 25% of the time, right? Run those numbers. Those are not positive numbers. And most of the professional traders that I talk to, their extreme take profit is 1.5. In other words, they're comfortable, maybe being 35-40% at 1.5. You have to ask yourself, the reason why I think, all of those, the most fake advice you get on the internet is these risk reward ratios and the win ratios. I have a 2-to-1 risk reward ratio and I win 70% of my trades. Just think for a second what the liar is saying to you. They're basically saying to you that within a couple of months, they can take a $10,000 account and run it to about $1 million. And then within a couple of months of that, they can run it to 100 million. Within a couple of months of that, they can run it to $1 billion. Nobody in the history of trading has ever achieved 70% win rate on a 2-to-1 risk reward ratio in any kind of a high frequency. Maybe if you did 2 trades a year, yeah, okay, that's great. That's not the same. If you did more than 100 trades a year, I guarantee you've never done that, because the math of that is simply impossible. In any normal corporation, your profit after you sell toothpaste, you Procter and Gamble's profit is 5 cents, right? So a 5% edge, where let's say you have a 50-50 bet and you're winning at 55%, is extraordinarily lucrative and extraordinarily attractive, and far pretty much at the edge of reality of what you can achieve. And, ask themselves, are you better than Exxon? Are you better than are you even better than Microsoft or Google? I mean, Google, Microsoft, the fattest, highest, most lucrative. Amazon has like a 5% edge on all of the packages they sell to you. It's just not reality. And you're talking about markets much tougher than all those guys. All those guys dominate their markets. They're the axe, as we used to say in the old days, of those markets. You're just, you're competing in the single most competitive market in the world. So you should be grateful for a 5% edge. And you're right. I think that's another thing that's terrible, because people have these horrible expectations of like, hey, if I just do this with, what people tell me to do, and I should be earning, I should take $10,000 into $100,000 in 2 months. Yeah, I mean, anybody who does that is just basically gambling with a 10,000 that they're trading, and that's why it's non-replicable. Yeah, how many guys who you've seen win trading contests then go on to trade for the rest of their life? The answer to that is almost always zero, because they die. They all die in the battlefield. And what I try and do is survive for a lifetime, and that's where those numbers, that's where those skills and those expectations really come in. If you want to survive for a lifetime, you have to have a much more realistic idea of how trading actually is really done. There's only 2 price actions that happen, and you need to have setups that can accurately filter for when those things have a higher probability of happening. The 2 price actions is continuity and reversal. As a matter of fact, there is literally no other strategy in trading, and everything from the most complicated Elliott wave structures to the most algorithmically driven high frequency trades to your basic macro, hey, let me look at the world ideas, are all a function can be reduced to just 2 types of trades. It's either a reversal trade or a continuation trade, right? Now, what we do, and where my setup has been very helpful, and I have to really thank Linda Raschke, the market wizard, for this, because I've had her on my Trading Fest several times. And like the last time we had her on Trading Fest, she sort of, I just let her talk for like 2 hours. And she basically just gave like a PhD level seminar in intraday trading. She's been an intraday trader for like 40, 50 years, and the most interesting thing she sort of pointed out to me was the fact that intraday trading is basically auction theory. It's just like going to Christie's or Sotheby's, in terms of betting for art. It's always auction theory, and always the highs and the lows of the day are the most important levels to watch, right? And that's we developed basically our reversal and continuation strategies relative to the highs and lows of the day, And I was just thinking about this, not to wax philosophical here, but I thought it was interesting. Like I was like, why do highs and lows of any instrument, but of course, stock index futures, which is what I specialize in, matter so much. And that's because as human beings, we're always a relative bet species. Like we're always comparing relative to whatever is the current standard, not the absolute standard, right? I mean, I'm just thinking like, what's the definition of happiness? It's an absolute standard. Like, if you're healthy, you have enough food, you have shelter over your head, that's absolute standard of happiness. But nobody's happy with that. Nobody's happy with that, because what you want to be is you want to be running a marathon, you want to have the biggest house in the world, and I don't know what the third value, and you want to have more, more toys. None of those things are necessary for an absolute standard of happiness, but we all want a relative standard of happiness. And I think as a human species, because we're always measuring ourselves against some moving target, that behavior completely translates itself into the marketplace, where the highs and the lows become the relative barriers against which the price constantly battles all day long. And that's where we spot our opportunities and try to trade those trades. That's basically it. Our strategy actually is extraordinarily well suited to prop trading, because it takes very small, very defined limited risks and has very small defined limited drawdowns. And then what I did is I simply, so just to give you an idea, you have a $100,000 account. The typical prop the typical prop challenge is 10% up with a minus 5% drawdown. That's sort of almost all the prop firms have that formula, right? So now I've kind of refined my setup in terms of sizing, where we're going to take probably about 10 trades a day. Remember, not all of them are going to be winning. So some of them, we try to shoot for, aim for on a $100,000 account, $200 a day steadily. That gives you 1% a week. And in 10 weeks, we achieve the target. Now, again, that may not sound exciting to people who want to pass it in a day, which is fine. Go ahead, pass it in a day. But the flip side of that is I have virtually no drawdown. The drawdown is 5%. My drawdown in the last week and a half has been half a percent. I think I'm talking about max drawdown. And even that's going to get lower because of the sizing. So, there's two ways to achieve leverage in all financial markets. One is the classic way we know. You take 10,000, you borrow 100 times against that, you have 10 million. Is that what it is? Yeah, 110,000, or is it a million? No, 10,000 times 1,000, whatever it is. That's the classic 1 to 100 leverage, right? And that's how people do it. You take $1, you borrow 1,000 times against it, you have $1,000. That's what you're trading, which is fine, but obviously, the problem is even the smallest move against you wipes you out completely, right? Like 1% move on 100 to 1 leverage. So Dow Jones goes 1% against you. You have a $10,000 account on 100 to 1 leverage. You're wiped out. Your 10,000 is gone in a day, right? So that's one way to achieve leverage. Another way to achieve leverage, which is the way we try to do it, is by constant turnover, by flipping over, by doing 10, 15 trades on the same $10,000. And so $10,000 flipped over 10 times is the same thing as 10 to 1 leverage. The good example of that in the real world is Zara, the fast fashion retailer. The reason why they transformed the whole fashion industry was because he flipped the whole store inventory in like 5 weeks. Everything that, he sold everything out in 5 weeks. He bought more. So he didn't need huge amounts of money to purchase inventory and hold it in the store. He would take small amounts of money, buy a small amount of inventory, sell it, take the same amount of money, buy more inventory, sell it. It's the exact same concept that Zara used in fashion. We like to use in trading. Of course, the great benefit of that is your drawdowns are extraordinarily small because you're trading on very small leverage. That's one of the greatest discoveries people make. Even if they pass the challenge, they tend to lose the capital right away because of the way that you're trading on the demo account to pass the challenge is really much more a function of luck than skill, right? If you're trading if you pass a challenge in a day or 2 days or a week, it's all luck. There's nobody makes 10% in a week without taking huge risk and just being lucky on their position. And therefore, that luck doesn't hold. So when you're trading in real life with real money, you usually lose it in the first. They take your money away from you in the first week because you failed your luck test. So what we're trying to do is teach skill. which is obviously much more durable and robust. And that's where smaller leverage, turnover of capital really makes much more sense. And having said this, I have to qualify this. I think anything I say is only applicable to me and people who have a personality similar to me, right? So under no circumstances do I think that what I do, you should do if you don't feel comfortable with it. Because there's 100 different ways to trade in the markets, and there are people who trade very differently than I do and very well. And you need to just, the single most, we talk about this all the time, that the single most important thing is that you need to align your strategy with your personality. Now, in my group, we actually created a banner and a logo. We call ourselves Degenerate Traders. And it's kind of a, tongue-in-cheek comment about what we do, meaning, the logo is Degenerate Traders, any market, anytime, because we like price action. I'm a person who doesn't have a lot of patience and likes quick in and out stimulation and ample. So the other positive side of that, of course, is I have lots and lots and lots of sample size. I can within a week do 100 trades and have a good idea of where things are working, things are not working, and how to tweak them. So I get a tremendous amount of fast feedback. I'm a person that likes fast feedback. There are people who despise the way I trade and like to just simply trade, once a week or once a month. The good thing is my strategy is very scalable. It is fractal in a sense that the same reversal continuation ideas repeat themselves on much larger time frames. It's just that, I would die of boredom watching the 4-hour chart. And I mean, I went back to FX for a little bit. Kathy always drives me back to FX occasionally. And even like on a 1-minute chart, I'll lay down a trade on euro, just to give you an idea, within stock index futures, our average duration of the trade is around 10 minutes, right? I'm in, and 10 minutes is like a long time. I'm in, and usually sometimes it results in 2 or 3 minutes. And I'm trying to do this, 5, 10 times a day, find optimal points during the day. And I'm just in and out 5, 10 minutes. So then, we started applying this to currencies, which actually works. But like on euro, the same duration is like 2 hours. And I'm like, I'm dying of boredom just watching this thing, because it's like a slow motion car wreck in FX. So you have to know what you like, what kind of velocity you're happy with. And by no means, what I do is should you do if that's not the kind of, if you like to go fly fishing, then my strategy is not for you. If you like to go fast on a motorcycle, then it probably is. Feedback is a wonderful thing, right? I did a Trader Fest a little while back, a couple of weeks ago, and I had Denise Schull, who is probably the single greatest trainer of traders in the world. I mean, she teaches all the hedge fund managers. If you've ever seen the show Billions, the character of Wendy, who is like the main character in that show, the hedge fund psychiatrist, that's her. That was based on her character. So it was extraordinarily valuable to, and she used to be a former trader herself. So she isn't just a psychiatrist who teaches you how to trade. She's a trader who went back to her original, training. And so she had a tremendous amount of impact on me. And one of the things that she said to me is that I think this is great advice for anybody. There are 2 things you need to do to make your trading strategy successful. You need to trade your strategy, and then you need to trade yourself. Meaning you need to, when you're taking a journal of how your strategy is doing, you also need to take a journal of how you are doing with that strategy. Because that's the thing that people always forget. There are 2 variables in the game. There is, your analysis of the market, and then your execution of your analysis. And your execution of your analysis is always 100% going to be emotionally based. 100%. I mean, one of the first things is that emotion is a feature, not a bug of human condition, which is very true. And once you embrace that, once you understand that there is no such thing as discipline or controlling your emotion or any of those nonsense terms that anybody tells you, because that's literally physically and psychologically not possible in human beings. What is possible is to study yourself sort of on a kind of outside basis and understand, well, I've seen this, every day this happens and I do this, every day this particular setup happens and I get suckered into taking it because I think that that's the right setup, but it's really not part of my stuff. So once you actually start to take and classify your own behavior, your own patterns, the patterns of your personality, in many ways, I actually think are more powerful than the patterns in the markets. The patterns in the markets are actually, relatively easy to interpret, but to understand your own patterns and then modify them, because you trade yourself the way you would trade a chart. You say, oh, well, that's a dumb setup because of course it's not going to work. But this setup, if you do it, that's going to work. Speaking about, FOMO, for example, FOMO was a huge failure of mine. And that in many ways, what that entailed is that my algo has all sorts of like drop-down menus for each particular strategy, but it also has a drop-down menu for market, right? And anytime I used market as an entry strategy into the marketplace, that was generally a sign of my poor behavior pattern because I was chasing something. I was not letting the algo take the trade. So that's what helped. I mean, I already forgot. I started ranting over what my question was, but I think the most important thing is I learned how to trade myself in conjunction with trading my own strategy. That's really improved my overall performance. It went from me making 30 unnecessary trades a day to making just 7 to 10 qualified ones. It's all part of your trading journey, and that's part of the thing. What I mean about not suppressing, you're going to lose all that money. You're going to jump from FX. You're going to go to crypto. You're going to trade stocks. You're going to do this. It's all part of your journey. It's not a bad thing. You need to learn what you like. You need to figure out which market appeals to you. Maybe some market you really lost a lot of money in it, but you really found it interesting. You need to explore. As long as you sort of understand, look, there's zero chance I'm going to succeed in this time or this time or this time. But what there is there's all this valuable experience that I'm gathering. I like the way crypto trades, or I'm really comfortable the way Forex trades because, it's much more responsive to longer term charts. I understand the long-term macro implications. I understand, maybe I want to do carry trading. And certainly that's one of the least intensive strategies because, it's essentially an interest rate strategy. So as long as you have a long-term suppositional view on interest rates, you're going to have a very good time in carry trading. There's a million different things you do. It all depends on your personality. So go out there, explore. I'm not a believer saying, oh, you only got to do one thing and one thing only from the beginning, and that's going to give you success. It's almost actually going to lead you to total failure. You cannot focus on one thing until you've kind of wasted your time on many things. I think that's sort of, it's part of the human condition. You got to just really waste a lot of time and money exploring. But that's the joy of it. If you still find it joyful, if you still find it interesting, that's when you can really recalibrate your focus to the one thing that you think is going to do well. The markets are always changing. And of course, the single constant that's changing, in the markets, ironically enough, is volatility, right? We always talk about the fact that volatility is mean reverting, right? But in that reversion of the mean, in that roller coaster ride of volatility is where you either win or lose. Yes, eventually everything comes back to its normal value. Eventually Tesla is going to trade at $20 a share because that's what it's really worth. I don't want to get any Tesla fanboys on me, but from there to here, you're going to bankrupt yourself 10 times over unless you understand volatility. And I think that's one thing you constantly have to change. Markets, the tone of the markets changes all the time, so you have to always watch them. And also, the other thing is right now, let's think about this. Right now, equity markets have a lot of intraday volatility. Where bear markets are actually excellent for intraday volatility. But God help me if we go back to I'm trying to remember, was it 215, 216? There was a period of time in the equity market where we did not have a 1% day. In other words, right now we move 1% in an hour, right? We move 1% an hour. If you move 1% an hour, that's like heavenly manna for anybody who day trades. But in 15 or 16 or 14, I forget what it was, some very low volatility environment, we didn't move 1% for 250 days. In other words, the equity markets moved within 1% range. That you might as well just put a gun to your head and blow your brains out because not only you're not going to make any money, but it's impossible to watch the price action. So one of the ways to improve yourself is to you have to constantly be on a lookout on what other market where other you have a certain methodology. You need to be able to apply it to an instrument that's responding to that methodology. And sometimes you just have to, there isn't any, and then you just have to not trade. But yeah, just because you have strategies doesn't mean they're always going to work on that one particular product. Like the classic example, the really, really classic example of how things change is that people always used to tell me is orange juice, right? So orange juice was a product, and it's an obscure little product, but if you've seen trading places, everybody of course remembers orange juice futures, right? It's an obscure product, but like it used to always be a buy in the winter and a sell in the winter and a buy in the summer. And the reason why it was a sell in the winter was because all the producers in Florida were producing it in the winter, and then there was no production in the summertime, so the prices of oranges would really, skyrocket, right? So that was like the constant pattern of the orange juice market. You'd be a sell in the winter, buy in the summer. Then Brazil became a huge orange juice producer. Now, and Brazil, of course, on the opposite side of the world, so their summer is our winter. So they started flooding the market with oranges in the summer, and oranges became a sell in the summer, buy in the winter. Now, that is, you've been trading that market for 40 years on that seasonal pattern, and you would have been fine. And then the rug would have been pulled underneath you. And that's what I mean about the change in the markets. Markets are always changing in some kind of a variable that you haven't maybe even thought about. So you always have to be aware and adjusted to that fact that change is the only constant we have around you.
2021, post-pandemic. So we had the pandemic, the blowout, and then the rally back. And then we had kind of a euphoria in 2021 into the stimulus type stuff. And then we had the crash of everything in 2022 and now kind of the post-recovery period. So I feel like if you've been trading if you were trading since late 2019 into now, you've experienced 3 or 4 mini cycles kind of all in those years, which you didn't necessarily get in the 3 years before. So we've had a lot of action to adapt and learn and try different things and test your strategy and your risk management. So for me, it's been, so when 2020 happened, I kind of went into my old index trader mode and took advantage of the volatility and really cut back on a lot of overnight holds and things that I didn't really want to sleep with. It just didn't feel good to go to bed with these massive moves that were happening. So when the fear goes up and the uncertainty goes up, I know people are going to want to move around and make a lot of adjustments during the day. So I try to keep my stuff during the day more. And when that kind of went away, it made more sense to do less of that and a little bit more occasionally swing trading and holding some stuff a little longer. But when I get into that, it's not necessarily my strength as opposed to the during the day stuff. So while I want to know what environment we're in, there's also what is Brad best at? And it not always the same. So there's kind of a few things going on. And I think fast forwarding to today, we have some of that happening again. So at the beginning of 2023 and in parts of 2022, it was a good environment for me because it was busy. It brought back a lot of the index trading stuff that I kind of learned to do when I started in 2003, which was taking out levels, big moves up and down during the day, and not a lot of this sustained bull market, low volatility type stuff that we've seen maybe the last, I don't know what it's been, like 37 days in the S&P without a move over 1%, I think I read. So when that stuff starts, that's when I have to, for me, it's a less advantageous environment during the day. And some of my positions that I have longer term do well, but the stuff that my bread and butter, kind of my income trading, if you want to call it that, doesn't really do as well in that environment. So one of the things that I learned about myself a long time ago was if you're trading the index futures and you like volatility, sometimes you'll even do better when it's chaotic. What happens is a great hedge against that is actually owning index funds and assets. So if I own index funds and assets, when it panics, it doesn't always feel good right away. But if I'm buying them while it's panicking, eventually things recover and those assets do well. And then my trading has done generally pretty well during panics and during volatility. But then when the volatility gets sucked out, my trading may struggle, but my assets are doing well. So I've kind of had that arrangement working for me. And so the middle ground between that arrangement would be getting really good at trend following, swing trades, which I think a lot of people are doing. Earning strategies, holding things for a few days to a few months, bull market conditions really, which has been the last few weeks. And so that's another sweet spot. But for me, that's been something that I haven't really mastered like I have the other stuff. So I've tinkered with that. I've tried earning strategies. There's a lot of things that I will do in there, but that's really not my bread and butter, as opposed to kind of what I just described before. So I've learned for me to kind of put some guardrails around my system, and this hedging with owning stuff at panic times has kind of been a good approach. I mean, don't get me wrong, when things are going down and I'm picking up stuff for a longer term perspective, And sometimes I'm off by, I don't know, 5-7%. I try to really get stuff when it's panicking. And I've learned to just kind of buy index funds and high quality ETFs versus getting involved in a lot of stocks, because my only plan here really is to just own stuff when there's a lot of panic. And then know that if it stays really crappy for 2 or 3 years, I'm probably going to do well trading, and I can just kind of weather the storm. And then eventually we recover and I have stuff on the books. So of course I'm working on the middle zone of also catching these swing trades when we do it like the last 3 or 4 weeks. But I found that it is really hard for one person to do all that stuff. It's very difficult to trade during the day and then to hold it overnight for 2 or 3 days. And then you have a stock position on, and then you have a longer term portfolio. I mean, I've been trading for 20 some years, and I have tried, and it's been painful to do that. And I've kind of submitted to the fact that I'm pretty good at one area, and the other stuff, I have to just do what I described to you. And it doesn't mean I'm going to stop learning and taking trades occasionally in the other time zones, or maybe doing it smaller, but you just can't do it all in one person. It's very, very difficult to do. Being a trader of my nature, if things get really juicy, frothy, sometimes I might sell calls against it, or I might actually get out and get back in. But I'm really trying to just keep building more assets, big picture, and then use the volatility to accumulate the income trading, and then fill up the bucket with the assets. And then there's other things you could do. You could do real estate investing and whatever else. You get 5% treasury money market rates right now, which isn't going to make anybody rich, but it's something. But it just is I'm trying to find the word for it. It's just an acceptance of, it's not that I'm not going to grow or learn or I've given up. It's just that trying to do all that stuff. The last 5 or 6 years, I think I've spent probably a good 18 months on a lot of other strategies geared towards catching earnings winners, swing trades, kind of like your typical 2 to 3 day swing trade, bullish type environment system. And I've had some success and I had good runs, but then I've not really caught on with that like I have my other stuff. And I think it's because my heart isn't in it either as much, because when I was younger and I really learned this index trading stuff with the futures, that stuff is seared in you, and you really have an edge with that, and you feel like you know where you're good. And when you try to pick up something new, you have to really have your heart in it, and you really want to work at that over and over and get up and the excitement gets you out of bed in the morning. And I found myself dragging a little bit. So I've had to make adjustments and just kind of listen to that inner voice. I watched the Arnold Schwarzenegger documentary on Netflix. I don't know if you've seen it, but it's really good. And he's talked about I'm going to get to your question in a roundabout way. He started with coming over here from Austria as an immigrant and won all these bodybuilding championships and had a real directed focus to do that. And then after that, he got into being an actor and struggled through that, took classes, and eventually was the highest grossing actor. And then he got into politics. As a Republican, he ended up winning a Democratic state in California. So three amazing lives with one person. And he always had that, well, the way he tells it, I like to know the inner details, but the way he tells it, he had that directed focus on each thing. And when you had that directed focus, it was easy to kind of narrow in. But then your question is, well, what do you do if you don't have that directed focus? And that's the book I would like to read, because I think a lot of us, if in our trading and sometimes in our lives, or as we age and we have different things to accomplish and new things to try, we don't have that focus and what to do. And I think for trading, I think it's experiment with things with small size. Sometimes it's making an effort to network, to get out of your house, to meet with people, to talk about different strategies, different things. And like for me, I joined a small cap stock trading group, and I tried this was a couple of years ago. I spent a good 18 months with earnings strategies and small caps, and I learned a lot about it. And I ultimately learned that it probably wasn't for me, but I kind of know what I don't know now. So that was a push I made. And then another push I made was, which I'm doing right now actually, is I'm working with a friend who I grew up trading futures with. And we use some programming stuff that we learned from GPT to develop a system. And basically the system is just a way to tell us whether to buy or sell with a very slight positive edge, but the drawdown is pretty large. So you wouldn't do the system outright. But what we're doing with it is using our discretionary skills to decide if we want to take the trade or not, and see how much better we can make it. And is that something we can scale? So in a sense, it's almost like a way to scale, a backdoor way to scale. And that's another new product I'm trying. So I don't know if these things are going to stick, but as I check them off, it's just another thing that I kind of know that I've tried and I can rule it out. And it strengthens my core trading, because sometimes when I've lost the most money, it's when I'm confused about what I want to do, or I want to make another jump. So I'll try a lot of other things and sometimes get lost and maybe trade a little too big doing something else. And it eventually brings me back to my core thing that I've done. And then I have more excitement and more of a focus, but sometimes I need to kind of go off to go back in. So that's one thing that I'm working on right now. I think another thing is just releasing sometimes and doing less of it. And when you get so close to something, I mean, I think we've all heard stories about people who've really wanted something in their life and they focus on it so much. And then when they forget about it and sort of give up, it comes. And I think with the trading is very similar, where you have a clear focus on what you want, but sometimes when the market's not where you are, or you're having trouble getting out of bed, or you're beat up, or you feel like this is tough. I mean, it's emotionally hard. This is a very emotionally hard job. Sometimes you have to let go. You might need to take walks in the middle of the day. You might need to reach out to other traders. You might need to just take some time off. And I've found that my best runs consistently over my career have happened almost out of the pits of despair, out of the periods of disinterest and openness, and a period of despair maybe before that, and then kind of moving into this kind of empty spot where I don't really care what happens, and then something happens. So is getting yourself to that mindset, I think, is really important. I think trading, I don't know, we talk about trading, and everyone has a personal how to buy, how to sell. And I think that learning from others who are like you, who have your temperament, who have your lifestyle, can be very useful, because you can start to actually talk X's and O's of how you do things. But others, you might learn from them psychologically, or their attitude, or how they carry themselves, but your strategy might be very different. But I feel like either way, it's important to kind of you want some peers that are that maybe your age, your trading zone. You want some people who are older than you, who are more successful than you, and you want some people who are younger that you're kind of helping out. And it could be different levels of helping. It could be buy and sell, how to do it. It could be, what does life feel like when you have kids? I just have one, you have four, you have more money. What do you do with your money? It could be a younger person who's managing their emotions and their temperament. So I try to have all that going on. And sometimes it takes work to reach out and to connect with people. And I think a good thing for that is just when you feel like doing it, you do it. And when you don't feel like doing it because you're into your own trading, you don't do it. And you'll know kind of when it's time for you to go on one of those periods where you're reaching out to people. And like for me, I haven't done a podcast for a long time, and I've just been kind of inward, and just and I'm coming out of that a little bit now. So I feel like I'm ready to talk more and to discuss and reflect. And for a while, that's not where I was at. I was working on stuff. And I think you have to obey that. I mean, I never would tell anybody you can or can't do something, because anything's possible at any level if you have the will to do it. But I had the strong will to do it when I was in my early 20s. So it was much easier because I had no responsibilities. I think some folks have had other jobs and made money, and they have financial freedom to go a few years without making trading profits. And that could be another situation where you're set up pretty well. But when you're only trading and you have a family and you need it for money, it's very difficult, because you're now trading. A mentor I had said, it's hard enough to trade the market, but you don't want to trade the P&L and the market and like in your own market. So you end up having 2 or 3 markets you're trading. There's like a self-esteem or confidence market. There's, I need to make money. And then there's, what's the actual product doing that I'm trading? And that's really tough. So if you can get yourself in a position to only trade one of those things, it's a lot easier. And it never gets easy when you're not making money or you're struggling. But I think with kids, there's a good thing too. You have more focus and broadness in your life. So there's a lot of stresses and challenges, but there's also like a deeper fulfillment, kind of like a big hug that you get of love and care that you didn't have before, which I think is a good thing. And it grounds you and it helps you get through things easier. But it also creates stress on the other side, because you want to make money. And sometimes you miss trades and you miss days and you're not completely focused because of kids crying, or they're in the house. Like my kids are in the house with me a lot. So sometimes it's distracting and I'll miss things and I'll get frustrated because I'm not focused. And that's hard. Sometimes it's easier though, because it's not the only game in town. My trading is now a piece of my life, not all of my life. And it used to be most of my life or all of my life. So there's pros and cons to it, like everything. I think having a little bit of money so you don't have to make it. I mean, I always say to people, I mean, some people say 3 to 6 months, but honestly, realistically, 3 years. I mean, 18 months to 5 years. I know 5 years is a long time, but that's probably too long. But 18 months to 3 years of not having to make money and freaking out about making money is a really good place to be, where you can set yourself up for success. If it's 3 months, it's very difficult. I was talking the other day with a friend. Can you imagine if we had to do this with kids without any money behind us and the expectation to do it in a month? Because I'll be honest with you, sometimes I've had a pretty consistent record over the years, but sometimes I don't make money for 6, 8 months. I've had it before, 6, 8 months, nothing. And then a really good month or two that makes up for it. And then like I've had the last 3 months, I haven't really gotten much done at all. And I've lost money. And then at the beginning of the year, I did pretty well. And I just have been slowly giving a lot of that back. And I have a little bit of it left now. Maybe I give half of it back, I think. So, and it's starting to pick up a little bit lately again. So, I mean, it could go a year, it just could. And that's the time that you always say you get stronger later when it happens. But when it's happening, it doesn't feel good. When I first started trading, this was, so I'm 42. I started when I was tinkering in my teen years, but I really started at a firm professionally when I was, I think, 21 or 22. And we used to get paid once a year. So it was really difficult that way. They would give us what's called a draw. It was like a couple $1,000 a month, and we had to pay that back. So you make profits, they'd pay it to you, then you pay it back out of your profits. Then you get a check at the end of the year. And eventually they paid us quarterly. So it got a little better. But as you started to succeed, you start stockpiling money away, and then you would just get used to living that way. And now that I'm on my own, it's kind of all one flow where the money is just in different accounts, and it doesn't really work that way anymore. So I've made enough money to live on fine, and I don't have to worry about it. So it's more about, it's just continuing to make money and make investments. And it's not about, oh crap, I'm going to run out of money in 6 months. Where when I first started, that was more of a concern. It was, I need to do this right now. I need to pay my rent. These are important things. But as you go along, you learn to manage that, and it becomes easier. I would like to tell you it becomes easier psychologically, but it kind of doesn't. Financially, you lose that crutch where you're worried about making money. But I mean, you get expectations. You want to have a level of success. You expect a level of professionalism, and sometimes you let yourself down, and you just do. And you have to learn. I think learning to be gentle with yourself and to be to understand that cycles come and go, and times are tough sometimes, and you don't have to batter yourself into the ground, which was a big problem for me for many years. Even when I had a lot of success, it was being very hard on myself and expecting me to always be at the certain level of proficiency. And when I wasn't, it was, when I was at the firm in Chicago, I would compare myself to other people. How come I didn't see the move, and this and that? And that's just a destructive. I've learned to iron a lot of that out with age and a lot of self-work. But I mean, this is a never-ending challenge when it comes to that stuff. I mean, I actually like talking about this because no one talks about this. In my sphere, people who have been trading longer, there's very little discussion on what do you do with your money? People who have enough money, you just don't hear about it because you assume everyone either has no money or they need to have the next trade work out to live. I think, right now is a good environment if you have some money because you get 5% with doing nothing. So that's something. So if you don't know what to do, you can do that. So I have some passive income coming in from 5% treasuries. I have stock portfolios of index funds. I'm a stock manager I use who runs a portfolio for some tech type names, 8 or 10 stocks that are in and out of, and there's some options that are written on those occasionally. And that stuff just kind of keeps me, when I have someone else working on it, it keeps me out of it. And other people ask me, well, how can you have someone else work on any of your money when you've been trading your whole life? Isn't that just stupid for you to do? But again, I can't do everything myself because these people are looking at a time frame that might be 6 months to 3 years, some of them 5 years or more. And I've been trained to watch for stuff during the day. So as much as I've lengthened my time frame a little bit, you can't. It's like you're the general of the army. You're fighting on the front lines, and then you're also trying to recruit and station people in their own little subgroups in the middle. So there's 3 jobs there. And I found that I can do the big job and the little job, but the middle job gets hard. At first, I thought it was better to do the middle and the small one, which would be swing trade and day trading. I found that to be I still do a little bit of that, but I found that to be tough. But like overall wealth management and mixed with trading, I can do that together. But I had to get a lot of it out of my hands. So index funds, treasuries. I have, what else do I have? I have some passive investments, some private investments that I don't know if they're going to work out or not. That might take 10 years. Some biotech fund I have, and some startup stuff. I live in the Seattle area, so a Pacific Northwest venture thing I have going on, and some things like that we'll see how they play out. But ultimately, it's treasuries, trading income, and money that I've saved. I've made enough money trading, luckily, where I can just tap into that if I have a problem. So I don't need to rely on the regular thing as much as I used to. At some point, yeah, you got to make money, but the pressure of having it happen right now is not there, which is good. That's good. But I've had a lot of stress. And I know this is not relative or not applicable to a lot of people who are listening, but maybe it is to some. I've had a lot of stress in my life the last 2 or 3 years, figuring out how to handle money that I've made trading in terms of what do I do with it? Because you start to put on positions and try to trade them yourself, and then you're trying to time that market. And then I would find that when I had a bad day trading, I would go over and sell a bunch of my stocks, and it'd be the worst time to do it. And I couldn't emotionally, I would get my wires twisted, and it just wasn't. So I learned how to do a better job of that the last, I would say, couple of years. So the thing I described to you in the beginning about buying assets when there's a panic and then trading is kind of my approach for now. One more thing about it is I can't even overstate the amount of relief I had when I came to hopefully you get the relief from hearing me admit to this, but it caused me so much stress because I thought, man, I need to double this money every 5 years. I need to be smart with it. I need to get to the next level by learning how to hold things for 6 months or 12 months. But I thought, well, that's not how I made the money. And now I think I can be an expert at that, which is really a whole nother lifetime. And it's not that you can't be better at it, but I realized that being less stupid with it is better than trying to be really good at it. And I didn't really have the heart to go on and spend the time and energy doing that. But I tricked myself into thinking just because I had the money to do it, because I was good at one business, that I could just be good at the other one. I could be William O'Neill or whoever, some great 12 to 18 month trend trader. And occasionally I'll find something, sure, but that's not what I did to get here. And it was arrogant of me to think that I could just do that. And better yet, though, was what if I could buy things? What if I could naturally have more of a patience muscle, because I can make money when the market falls apart or when it's busy because I can trade. So that keeps me busy. And then when it gets really ugly or panicky, I can kind of see the sentiment and the signs. I just start buying stuff that I like, buying index funds. That's a pretty cool system. And that's something that I can actually do. And even though it's buy and hold, and things don't go up forever necessarily. I mean, they kind of do, but in other countries they haven't, but in the US they have. But when that stuff comes back, if I keep buying during panics, I eventually do very well. I mean, it ends up being where you can at least get 7% a year over and double every 10 years. And that's not exciting to some people, but if you're able to make money in other periods and you have money that's stacking up on the side, the math works out very well. So while I hope in my life I have more ventures and I maybe get involved in more businesses and other things happen, for right now, this is kind of the lesser of some of the other evils that I was doing and some of the stress I was creating. My wife and I recently watched the Miracle Morning documentary, and I had read the book a long time ago. And I thought, well, why does this work so well? And there's just something about getting up early, walking in the morning, thinking about doing a little, I've heard it called segment intending, which means every time a new segment starts in your day, this podcast would be a segment. And then when we get done, there's another segment. You kind of spend just a few seconds, 20 seconds, thinking about what do you want out of the next segment. So I've really tried to think about, what do I want out of this conversation today? What do I want out of my workout? What do I want out of my drive to town? So that's been very helpful to think in terms of that. So I don't always get up at 5:30 every day and do I like to get up early, walk, and then I do a little bit of what I said and maybe a brief bit of journaling and then like a 20 to 30 minute meditation. Some days it doesn't happen that way, but generally speaking, that's kind of the routine I've been on. And I've been also taking a break now when the market's a little slower, mid-morning every day for about an hour and just going on a walk. And that's been really nice to break up my day. And I find that I get more, even if I miss a move, I end up coming out way ahead by being refreshed and sometimes seeing things a different way, or just not losing money in something that just banging my head against the wall. And then at nighttime, It depends. Sometimes it's walking audiobooks. Other times I'm really into reading. I just read this novel called Musashi, which is really good. It was a Japanese novel. So I did that it was 1,000 pages. So I was on that every night. And once that stopped, I was on the documentaries for a little bit. And then now lately I've been meditating at night and just kind of hanging out and journaling and maybe watching a little bit of YouTube interviews with people. So it kind of changes depending on what I'm in the mood. Sometimes I'll watch shows for 2 weeks and just waste my night watching shows. And then sometimes I'll just be learning and reading. And then so my point being that I let myself have that freedom to move around a little bit in my routine, but that's kind of where I'm at for now. Well, I think if you can go on a walk, it really helps. I'm on the Pacific US time zone, which is tough because it's a 6:30 a.m. market open. So sometimes it's hard for me to do that. I want to stay up. My kids go to bed. I only have like an hour of free time, and then I got to go to bed to do that. So oftentimes I have to move my day around. But if you can walk in the morning before the market opens, I think it helps a lot. It really it resets you can see nature or you see other people, and it just puts you in a different mindset. You can kind of you can consciously think about your day. Whereas when you get up right before the bell and you go in there and start trading, you're kind of, in some ways, you're unconsciously creating your day because you're under the gun right away to just look at the market, in which case it's kind of imposing itself on you. But if I can walk first and separate myself a little bit, and you could meditate or journal or whatever you want to do, but I like to walk. If you can do that, you kind of are in this conscious mindset. And then when you come into the market, you're deciding what you want to do versus having it kind of decide for you sometimes. I've noticed that can be a little bit of a differentiator for me. And also there's times when your style is in vogue or it works well. Like for me, when it's volatile overnight and we're having a lot of fear in the world or just uncertainty, I know that it's going to be good for me. So I get in there earlier and I'm ready to trade pretty much all day. But when it's not like that, like right now, when it's been going up every day and it's a little slower, I just take more time off. I come in the morning, I disappear for 2 hours. I check on my phone. It's slow. I don't come back for that day. And I just give myself the room to do that. And I do better that way. It's okay to do that because it's not every single day is the same. And that's something that being raised to work really hard and get up early, I've had to unwind some of that because while it's nice to work hard, I would rather be smart and be opportunistic than just to grind and work hard. And I think some of us have to learn that lesson the hard way. I did. That's a really good point and I could actually do better at this. I used to record all my trades by hand every day. At the end of the day, blue and red ink religiously for years. And I started to get sloppy and I haven't done that as much. But one thing that does is it gives you an awareness of, you just see like, I'm in the middle of the range. What am I doing? This is not good. I want to be proud of where I plot my trades tomorrow. And that's sometimes I would say to myself, be proud of this when you look at it at the end of the day. And that would help me hold off on a kind of a crappy spot. But if you don't know, if you don't have that awareness, then you don't really know. It's like you're just unconsciously doing the same stuff over and over again. So I think building in some sort of a review process like that. And I think on a bigger review, like maybe on a quarter, what you said is really smart, where you say, I want to work on this one thing or these two things, not 5 things, but 1, maybe 2, and just really drill down on that. And I think that can be powerful. I think people who stick around doing this are in it for the personal growth. It's a spiritual, people who don't trade, this can sound stupid, but anybody can grab an account and start trading. And other businesses and other jobs, you have to get degrees and you have to go to school. So it's harder to jump in. So since everyone can jump into this, everyone has an opinion, there's lots of people who do it, but really to make it in this job and to get the benefits of it is to really just grow through all of your buttons. It's going to press every button you have. If you're angry or you have scarcity and fear and whatever it is, comparing yourself to others, it's for sure going to come up in this job. And not that it won't come up in other jobs, but part of the reason I think those of us who chose this, we chose it because we know that it's going to further us in breaking free personally on a lot of that stuff. So for me, it's always working on embracing that part of the job. And when that pain comes and that suffering comes, it's just another thing that I needed to learn and it needed to come. So I'm never trying to look at it as, why does this happen to me? This sucks. This isn't fair. One of the big themes for me was always injustice or unfairness or things that, if you work hard and you study it, then you should get it. And sometimes in trading, you just don't. And then sometimes you get it when you didn't work hard and you didn't study it. And it just goes back and forth. And I had to learn to unwind a lot of that fairness aspect of things, because that's not how it works. And I think embracing that process and just knowing that this job is going to really do that for you. And if you stick with it, you have to do that or else you won't make it. And I appreciate that about this more. That's probably the biggest thing I appreciate about the job. So I would tell others to not shy away from that stuff.
But I'm still generally trading, day trading stocks, has always been in the last 15 years, 14 years almost. And I mean, my account size is bigger now. Share size is a little bit bigger, but when I'm looking back at my trading, still the same fundamental rules that I was using on day trading, I still do. Like I'm a momentum trader, I scalp, look for short-term momentums. And I mean, if you keep that fundamental of your trading same and solid, you can just build your account around that. You don't need a lot of changes. Sometimes you adapt to the environments, but the fundamentals of your trading rules and strategies are, I think, the ones that should stay with you. You probably heard that the 90% of the day traders fail. And this is the statistics that, they try to say that's impossible, that negativity around day trading. I don't think they have any specific data on that, but I know there was a law court. There was a court back in maybe around 20 years ago, and some of the brokers had to release some of their information, and then they realized that yes, it is about like 80 to 90% of the day traders failed after 6 months to 1 year. However, if you look at it at other businesses, like they also have a very high percentage of failure. Like I think businesses like restaurants, I've heard that after 2 years, 90% of them fail and they move on. So day trading, because it has very easier entry, the barriers to entry are much easier. You can just open an account to fund it, get this more wide. But it's not really that different from other businesses or other careers or the entrepreneurs who start something and they fail. It's not super crazy, the 90% failure. It's way easier now compared to 15 years ago when I started. There's so many courses, the YouTube, tons of free information. But I think the number one thing that everybody should do is trade on a simulator. That is the most number one thing that everybody has to. And then I have to get rid of that ego that's saying that, oh yeah, I can figure it out, or I don't need a simulator, or my friends are making money, I can just start working. To get rid of that FOMO and ego, just go into the simulator and see if you can make money consistently. That's the most important part. If you can't make money consistent on a simulator, there's no way that you can make money on a live account. If you can make money on a simulator, still there's no guarantee that you can make live trading. But if you can't even make money in the simulator, there's no way that you can actually make money in a real account. And I think it's very important to stick to what you know and don't get distracted with distractions, because there's so many financial instruments that you can trade, like Forex and now futures and crypto and everything. Stick to what you know and you build your strategy around it. No matter how many times you tell them, but they have to go and experience that. I did it too. Like even the stocks, for example, you can do the penny stocks, you can do the blue chip stocks. So, but you have to go through that experience, get to all of that, frustrations until you reach that point. Like parents, how many times our parents told us something, but we still do that. You gotta go. That's human nature. You gotta go and do that. Hopefully, you come to this realization, so you stop doing that after a couple of experience. Have this self reflection and come to that point that okay, this is what I should do. This is what I should stick to, and these are the people that I follow. I think setting up a rule around your trading and life is really important. Like for me, for example, I trade 1 hour and then I'm shutting it down, close the laptop. And if I'm traveling, if I'm in the office, I walk away. My trading office is different from my work office. I don't even have trading platform in my work office computer. So I just walk away. I am not looking at that market because there is something going on. And over trading is the number one thing that people get that drop, just having a rule around it. I trade only for 1 hour. Take or, loss or gain, it doesn't matter. 1 hour a day or 2 hours a day, depending on what you're doing. For me, it's from 8:30 to 9:30 to 11 on the New York time. And after 11, I have to hand over my chat room time that I have to someone else. So it's not that I can stick around. And people don't like it when I go over their time. So it's having that rule is super important. So in mountaineering, what we do in the climbing, there's one rule that we have is that limiting your time into the dangerous area. Like for example, we do cross the areas that are avalanche prone, or we do cross ice falls and seracs that they can fall on you. But what we do is the rule is over there. You have to go fast. You don't camp. You don't do picnic down there. So you just cross as fast as possible. So the amount of time that you're exposed to that environment is limited. So when you're sitting behind your station for 8 hours, even though you don't plan to trade, you get tempted to make that trade. It's again that gambling and things, and it has like it's always like working on a restaurant is not really helpful for people who want to lose weight, because you're constantly exposed to all these foods and everything. So I think just like an addiction, and trading is an addiction, so you have to distance yourself from things that does impact you. And so just shut it down. Don't be exposed yourself to this. Like an alcoholic, like someone who's alcoholic, don't buy drinks. Don't be around drinks so you can actually get tempted. Very, very important element of success. I got lucky. I got lucky that I could survive the early losses. I was lucky that I was working in Vancouver. The time zone is perfect for someone who wants to learn to trade in the stock market, because the market opens at 6:30 and then you finish by 8:30. You can go to work. You can have this. Amazing. And I did wake up for years at 4 or 5 a.m. in the morning. It's hard, but I did it because I had the drive. So luck is a very important element. Where you live is a very important element. I mean, you can't change it if the time zone doesn't work for you. That's it's out of your control. But for me, the luck was very important. So, and in general, success in life, I think it's a very important part of it. Luck, you can't control that. But overall, I really wanted the lifestyle. I really demanded this lifestyle that I have, and I dreamed about it. And having that drive, and the fact that I'm going to get it because I really want it, I think it makes a huge impact on your success.
Hope you got some value from that masterclass here today. Hope you got a lot of advice on this. Make sure you take notes if you want. You can always go back and watch this again. I would appreciate this if you can share it with people who might find it useful, other traders who might get some value out of this. Make sure you comment below with your favorite advice you heard today. Other people can comment and add value. If you've not watched the other masterclass I've done before, check it out over here. It's going to be right in the corner of the video. And I'll catch you back here in the next video pretty soon. Ciao.